So let's start.
Okay. So market structure, when I mean market structure, so as I said before, price movement is all about market structure. And for an uptrend, we all know the higher lows, higher highs consistently. That is what is being made in an upward, like in an upward trend. So what I mean is this: price moving up, retracing down. Now without breaking the low, the previous low, it's what? Rather, it will break the previous high. That will give us what? A new market structure, buying market structure. We'll say the same what? The same decline in price. That's price moving to the downside, finding what? A bullish order block to actually what? Push price again further to the upside. So now how will you get in on this kind of market? All you just have to do is to find those demand order block that are around what? The previous structure, the previous what? Up structure, like this. So all you just have to do is to keep on finding what? Those areas of demand that price will likely come to, and then you buy from there. So like this one now, price will come here, you look for entries, and then what? You push to the upside. So that is how price majorly moves. Now the same thing is for the downtrend, it's just the vice versa. Please, am I too fast?
No, it's okay.
Okay. So now for the same thing for the downtrend, when we're having a downtrend, we have the structure moving to the downside. Now instead of what? Breaking the highs, it will what? Go further down, breaking the lows, then what? Do the same thing over and over again. So you look for the same thing, look for selling other blocks, that's bearish other blocks around the previous downward structure. The price will most likely come to, and then what? You sell from those areas. So that's how price majorly moves. So using other confluence, like as I said before, overcomplicating things in forex trading will make forex trading very, very complicated for yourself. Like it will become very, very overwhelming. So me as a trader, I don't like looking at too many things to actually kind of like how do I put it? Some buyers are very, very deceptive, like using too many conflicts like the news and my first outlook, stuff like that. Everything is based on structure. Because one of the main reasons we do all this, we look at too many things before picking the buyers is because we're having that fear of what us being taken out in the trade, or fear of missing out, fear of we losing, that's price eating our stop loss. So that's what leading all this what too many confirmation. Forex trading is a game of probability, it's a game of numbers. And the best way to play this game of numbers is actually following the trend. Now, I said in the previous on Friday, I wrote a note. I said focusing on past price action is one of the major mistakes many forex traders do made. Like you see people looking at price action of 6 months. They want to day trade, they start looking at price action of 6 months, 1 year. Those things are not needed. All you just have to do is look at the time window you want to trade. Are you a day trader? Are you a swing trader? All you're just focusing on is actually catching one day candle if you're a day trader. If you're a weekly swing trader, all you're focused on is just catching 1 week candle, not the full 1 week candle. It must not be from the bottom or from the top. You can just catch a little portion of that. I get to me? Hello?
Yes, yes.
Yeah, you are getting
Yeah.
me.
So you can just catch a little portion of that. So it doesn't have to necessarily mean that you have to catch it from the very point where price, because we've all had the idea that you must catch it from the very top. Most of the time, you won't have to catch price from the very top. Take for instance, if you weren't available when the price started, like from the beginning of the move, if you're not available, maybe you're doing something or you're sleeping, that doesn't mean you can trade that same trend again. You can still get in between. You can still get in. If you know your structures, you can get in between. So it's just about flowing with the market. You just have to learn how to flow with the market, because that's the easiest way to actually trade. If you try to like be conservative, like restricting yourself to many things, then it becomes very, very complicated. Flow with the market. Don't try to chase price. Just flow with it. Flow with it. And the best way flowing with the market, I said before, price action or price structure is all about waves. All of these are waves. If you've studied waves before, if you're a science student here in physics, these are waves. These are waves theory. So price structure is all about waves. If you can just flow with these waves, you knowing that this is higher lower high, then lower low. You know this is a new structure around here. You find the supply to actually sell from there. Doing the same stuff over and over again. Now getting down to what I want to talk about today. The previous section or the previous time we met, I talked about the weekly swing trade, which is just focusing on just 1 week data. So that one, I've actually looked at it because I don't like trading too many pairs. That before you get opportunities on those ones, you have to trade several pairs. And I'm not of the idea because it becomes very, very overwhelming. You just have to focus on, of the essence that you even focus on just what 1 or 2 pairs. Don't focus on too many pairs. Too many pairs will make forex trading very, very complicated for you. You don't have to focus on too many pairs. Just focus on 1, 2, 3 pairs, at most 5, and you'll be good to go. Trade it every single day, looking at their structure. So I'll be talking about today best way to use the 1 minute time frame, how to get the direction, and best way to use the 1 minute time frame. Now, there's something about those who call liquidity. Let's say if we're trying to buy, I don't talk about liquidity. You can't see me talking about liquidity because I used to say it before. Liquidity, if you know the meaning of liquidity meaning what? Liquidity means big banks and institutions coming into the market. So it doesn't mean that liquidity doesn't mean that price forming equal highs, because most of smart money traders that they call themselves smart money traders, they try to confuse what liquidity actually means. Liquidity simply means big banks and institutions coming into the market with their big moves. Those are called liquidity. So they don't like dumb money, price taking you out, retail traders inside a trend. Let's take for instance, this is an upward trend. Inside this trend here, this downtrend, people might call this counter trend. Yes, it's a counter trend because you're going against. What is that? Hello.
You can continue. It was just
continue. Sorry.
Okay. So inside this downtrend, this is a trade for another trader. These are trades for institutions. Institutions can still trade. They can buy here and then sell into this area of demand and still buy. So you can tell me these are all wrong movement. These are not wrong movements. Price is not all about the market is not about buying pressure and selling pressure. No, it's all about an algorithm delivering price. When I mean delivering price, this algorithm creates these waves. It gives banks and institutions and we retail traders opportunity to get into the market. It delivers this kind of price structure for us. Because if big banks and institutions are in the main control, price will be very, very manipulated because they will do whatever they want to do. But this is an algorithm, it's a set algorithm. They deliver this price to even the big banks and institutions. They deliver this price to them. It's like you said, the big banks and institutions themselves, some of them, they use inside information. When I mean inside information, that's the one who actually controls the market themselves, the one who have the overall algorithm. So now when you are trying to, now I can look at this as a buying structure because price might not actually get to this my area of demand that same day, and that doesn't mean I can't take a sell. I can simply take a short sell into this area of demand and still buy here again. That is, you sell to buy. So I'm not the essence. Anything in forex trading is actually good if you know what you're doing, even if you're using just trend line. I know some traders who use trend line and they're still making mad profits. So it's all about knowing your stuff and knowing it well. But one thing I will say about order flow is the precise entries. Order flow is very, very precise with order blocks and everything. So the other blocks, when you know how to do other blocks, they're very, very precise. But unlike the trend line traders and the support and resistance, whereby they draw their zones just anywhere, they're not that precise. We know before you can draw your demand order block or your supply order block, it's from the what? The base of the movement down to what? From the proximal line to the Dexter line, if you know what I'm talking about. Like this now, this is the base, the last of the base, and then what the momentum. So you know, these are precise way of drawing your other blocks. So, but support and resistance, they might just place a line at any point. But we other flow traders, we get this precise point where price is likely to turn from. So that's one of the good things about being a smart money trader. So now jumping into what we have for today, I would like to introduce what we call the intraday trading. Because when you want to focus on few pairs, you have to become an intraday trader, because in that way you get to see more opportunities than focusing on the weekly swing. So now what I said before, for a day trader now, all you just have to focus on is catching a small portion of what a daily candle. And a small portion will be around the New York session or the London and New York session. The Asian section has like over 70 to 80% of the time, it consolidates a lot. So that consolidation, that doesn't mean that it doesn't pass any information. We use that information that's being created in the Asian section to actually get our bias for London. And then what happens in London, we use to get our bias for the New York. That's how price actually flows. Because I said before, we don't focus on too many price previous price actions. just Asian section, using Asian section to predict the London and using the London to predict the New York is all you need. So now I'll be getting to the chat, and please, if you have any question, if I can push further, let me know.
Rich, you mentioned two lines, proximal and another one. You mentioned two lines.
Two lines, proximal and distal. Those are just like the up line and the down line of doing your other blocks there. Those are just the names.
Okay, so it's just the same as another block.
Yeah, it's just the same. It's just the names of the lines we put into our other blocks. The upper line is the proximal line, the lower line is the distal line. Those are just the names.
Okay, okay.
Yeah.
So right now, the session you want to have with us is more about day trading.
Yeah.
That's what you are going to have with us. And
yeah.
you said that you use the Asian session to determine the New York. That's what you said.
The London, we use the Asian section to determine the London, then the London to determine the New York.
Okay, so Asian to determine London.
Yeah.
And then London to determine New York.
New York. Yeah.
New York. Okay. So this day's session is on day trading.
Yeah.
Please, guys, synthetic indices, what we are discussing here, it's more on Forex and then indices, not synthetic. One thing about, Rich, just a minute. One thing about synthetic indices is that they are computer generated. They are not, in essence, like binary.com. It is the broker himself who creates the prices and everything. It's not created by real market players. Do you understand? So it doesn't have anything to do with London, Asian. They are synthetic, they are artificial. The company or the broker himself does whatever he does, just that he mimics the markets. So our sessions are mainly based on real market situations, Forex indices.
Yeah.
You understand? No, you can come in.
Okay, but if you really know your structure, you can still trade the synthetic index if you are really comfortable with it. But first thing first, master your structure.
Master your structure. Get your things together, especially in the real market before you go into, because the synthetic, it's more riskier. It's even more riskier than the real market, because you just have one company with an algorithm who just or computer systems, and he's creating his own markets. You understand? So as much as possible, our discussions will focus around the real markets, Forex and indices. Okay, so today's session, as he said, will be on day trading and using one session to predict the another and all that. Okay, so Mark, please, does anybody have any other question? I think Fab has been answered. In the next minutes, okay, so we can go on.
Okay, so if you take a good look at this trend here from the daily charts, this is one of the reasons I don't use the daily chart and higher time frames that much. You can see them. These structures are not structures that are clear. You guys can hear me, right?
Yeah, we can hear you.
Okay, so these structures are structures that are not clear. You can see how this is just impulsive move to the upside, without giving us a defined structure. So this is when I got to discover this, focusing on these stuffs, you have to move to smaller time frame to actually get a clearer structure if you're going to be a weekly swing trader. But since today we're talking about the day trading, I will just be focusing on just this one price action here. That's for Thursday and Friday, and then I'm going to do for Monday, Thursday, and Friday, and then we can move to any other pair suggested by you guys. So for here now, what I do is for the Monday, I decide to get the highs and lows on Friday. When am I getting the highs and lows of Friday? I want to see what price is actually doing, because those highs and lows, I started in the previous that video I sent to the group. Banks use them to actually aim for the targets. That's the algorithm. Use it to aim for its target. If you're selling, it sells to the low of previous day. If it's buying, it buys to the previous high of previous day. So next thing I do is to do a daily separation from the previous days. because I don't want too many noise. As I said before, all this information here are all noise. So you don't want to make the information noisy for yourself. So you're trying as much as possible to cut off unnecessary noise. So now your focus should just be on this just one candle alone. So you don't have to focus on any other stuff again. This one candle alone. So now what I'll be doing now is to go to the 1 hour time frame to actually mark my Asian, my London, my New York. Okay, I don't necessarily mark the Asian, so I just mark the London and the New York section. Now I change my time, this is my UTC, to New York, which is UTC -4 New York time. So the London section starts from 1 a.m. New York time down to 5 a.m. New York time. That's the kill zone. The kill zone. This kill zone, when I mean kill zone, it means where you get like precise entries, where price will actually move, rally up a lot in that particular day. So the New York section starts from 7 a.m. New York time down to 10 a.m. New York time. So after getting all of that now, I go to my 30 minutes. As you can see in the video, I want to see structure, most recent structure that has just been formed in my Asian section. Now, if you check this price very well, you will get to see that let me quickly remove this. You get to see that during the Asian, this is the Asian side. From this when price open down to here, you can count all of this as Asian section, because the Asian section actually starts from 8 p.m. New York time down to 12 a.m. New York time. But I will just decide to just count all of this. So now you can see we had a break of low to the downside.
Hello.
Hello.
Please,
Hello,
sorry for interrupting. Is anyone recording?
Yeah.
Yes.
Okay, thank you.
Please, who is this? Who just spoke? Is that okay? Let's continue.
Okay. So we can see there was a break of structure low right here. So I will be focusing on selling at this area of supply right here. Now, how I do my area of supply will be from the last bullish candle before the down movement. So that will be my area of supply that I will be aiming to sell from. But note now, it doesn't necessarily mean that I must wait for price to get to that area. I can just quickly do a short counter trend, because sometimes price might not get to that area before that day will close. It might just get to it before the end of the day. As you can see here, it got to that area at the end of the day before pushing to the downside. So does it not mean that I will not get any trade up onto this place? So that doesn't mean I won't get any trade. So what I do is I'm coming. This is something. So what I do is to go to the 1 minute time frame. I want to see price actually giving me a counter trend structure to actually buy. Like I kind of use the divergence or the Wyckoff, anyone you're comfortable with. Now the Wyckoff way of entering is actually very, very different, and it makes you get that precise entry on the 1 minute time frame. So this is the New York the London section right here. So this new London section on that particular day, we bought around this area. How do I get in on this buy? I use my RSI divergence to get in on this buy. Now my RSI settings, if you may ask, what's my RSI settings or stuff like that? My RSI settings are the only settings, which is the length. It's 13. The length is 13. Source close, same as charts. This is my RSI settings. So there's nothing more to it. So what I want to see in the RSI now, I want to see the last point where price broke structure. I want to see if there's a break of structure on. Now you can see the series of structure right here. Just your normal structure. Let me identify the structure right here. We had a push, which created a lower high, then followed by a lower low, then a lower high. Price hasn't breaking structure yet. We had the lower high, then followed by a lower low also, then a lower high. Price hasn't broken structure yet. Then we had a lower low, then lower high, then a lower low, then we had higher high. Now right here, now price has broken structure to the upside. Now you want to confirm if this place will be a great area for you to actually look for buying opportunities. Is this the right place for you to start buying? Has bank already started the move? Yes or no? Now, what I do, as I said before in the video, if you can go back to that video, I said banks, like the algorithm, the way they created the algorithm, it doesn't use candlestick. It uses what they call ticks. Ticks works in minutes per seconds. It's very, very fast. So if you've seen the other flow chart before, not this normal chart, the normal order flow chart used by institutions, they use the what we call the order flow chart. That's what they use to create the algorithm. Now, this ticks now, they use it to actually create this indicator called the RSI. Now, this RSI now, it moves ahead of time before us. Like when I move, it moves ahead of time. If price is already changing structure to the upside, the RSI, like if banks have started changing structure to the upside, it shows in the RSI right before we start saying it's what in our price action. How do we get to know that? We look at the lowest point between those 2 points, in which some people will call the liquidity, like this point before the break, like stop ons. Let me take this out. Hope guys, before I continue, hope you're getting me right.
I think so far so good.
Yeah.
Okay. Yeah. So now you can see there's a stop on here. If you're looking for a stop on, this was a stop on push to the downside. So let me take this out so you can see the structure correctly. So there was a stop on here. Those who call stop ons. But I don't like using some of all this stuff. I just look at normal structure. So I'm not the type that talks about liquidity stop ons and stuff like that, all those good stuffs. I'm not saying they're not right for you to use it, but I just decide to just focus on my structure alone. I just make forecasting as simple as possible for myself. All these ICT terms, institutional flow terms, I know literally almost all of them, but I decided not to use those terms for myself because my brain capacity will not be able to assimilate that faster. So I just make use of price structure and I ensure that I know what they call structure of market a lot. So now what I can see here now, those who call it the stop ons, we had the stop ons before the break of I. Now you can identify this break of I. Yeah. Now you can see this is still happening inside our London key zone. So we still having this movement happening right inside our London key zone. I'm coming. This. So we can still have that movement inside our London key zone. So it's still safe for us to still be looking at a buy. So we know our aim is to buy into that area of supply. I get me. Our aim is to buy into that area of supply. Note that. So now we had this break of I. How will you know that this is actually a structure that price is likely to move to the upside now? So now let me quickly share a little bit of Wyckoff schematics here. Now it's left to you. It's not necessarily you pick up this Wyckoff schematics and start using it. It's just something that if you're still interested in Wyckoff schematics, knowing like if you're still the type that's still sticking with the normal order flow, which is being taught by our mentor, Papi, how to get that 1 minute entry for you. If you're still the type who doesn't understand the liquidity stop ons and other stuff, Wyckoff can be the next thing you can actually look out for to get the 1 minute entry. Are you getting me? Hello?
Yeah, we are getting you.
Yeah. So now the Wyckoff schematics, how does it work now? We saw this push to the downside. Now we call this
Papi.
this
Rich. You mentioned the landing kill zone. Can you give us a time for landing kill zone, New York, and then Asia, the time?
Okay. So I'll quickly write it up here. We have the Asian.
Okay. And these are the times that you yourself are also entering your trades.
Yeah, these are the times. I do nothing else and nothing more than this.
Than these particular times. That's when you come to pick your trades. Okay.
Yeah. So what I'm actually giving here, it's nothing else but the truth. I'm not taking anything out of it. And just doing this as a good just how will I put it? Because the sad the more you do good, the more good comes to you. If you get what I'm saying.
These are GMT, right?
Yeah, no, New York time. New York EST.
New York time, okay.
EST.
Yeah.
These are EST. We have the EST. And
the session on timing is running out, so I will send another link. Yeah, by the time you finish the writing. Yeah?
I can't get you.
The timing is getting over for the session.
The timing for this section.
Yes.
Yeah.
Okay.
So
how many minutes is remaining?
So Rich, hold on. We are all going to go off, and then a new link will come, and then we'll continue. Okay.
Okay.
Yes.
Okay.
Okay.
So as I'm sending another link, and then we'll reconnect.
Sure. Yeah.
Okay.
Okay.